A very good afternoon. Let's take a look at the markets. Asian stocks took a tumble on higher oil prices as Israel struck Iran militarily overnight. Most assets took a knock, including regional currencies. As a result, the price of gold also shot up during the trading session, given its safe haven status, with market players having shifted into a position of risk aversion. The Nikkei share average declined by 0.9%. The Hang Seng Index lost 0.95%, while the Shanghai Composite Index fell by 0.75%. US markets ended the session on a positive note, driven partly by better than expected producer price inflation numbers, easing concerns that the recent tariff measures had fueled inflation, which could be positive in terms of future interest rate decisions. But markets had not shot the lights out as investors continued to be uncertain about implications of a trade deal between the US and China. Today, it will likely be worse still as US futures, which indicate how US markets will open, suggest that they're opening in negative territory following, of course, Israel's decision to attack Iran earlier today. The Dow Jones Industrial Average rose by nearly 0.25%. The S&P 500 closed up 0.4%, while the Nasdaq Composite Index ended the session 0.24% in the black. Looking at local indicators, we see that the all-share index is down by 1% at 96,093 index points. The rand is trading at 17.97 vis-a-vis the US dollar, 20.69 against the euro, and 24.34 vis-a-vis the British pound. Gold is trading at $3,415 an ounce, platinum at $1,261 an ounce, while Brent crude oil is trading at $75.35 a barrel, up massively on yesterday, given the developments in the Middle East, of course. Now, for more on this, let's get into it with Mabianine Piri. He's a market analyst at EBC Financial Group. Thank you so much for joining us, Mabianine. So, US markets closed in positive territory yesterday, but that's likely to be a very different story today, given the developments, of course, that are taking place in the Middle East.
Yes, so U.S. equities closed high on Thursday, mostly because investors were feeling good about better inflation numbers and strong consumer data. But overnight, the sentiment changed with news of what's happening between Iran and Israel. And now the markets are on the edge. It's one of those moments where geopolitics start to drive markets. So today we're seeing U.S. futures are down. Volatility is up, and a lot of investors are shifting into safe haven assets like gold. Basically, we've gone from calm to chaos overnight.
So, of course, with the developments in the Middle East, the oil price has been hit quite hard or quite positively. It's up nearly basically $10 on where it was yesterday, about $8 on where it was yesterday. If sustained, of course, this will have inflationary impacts. But why has the price of oil gone up to the extent that it has, given that Iran, even though it is quite a big oil producer, is not the biggest? And on top of that, for a long time, there was a time when they were not exporting oil to many nations at all because of sanctions.
Great question, Nompu. So Iran may not be a top oil producer like Saudi Arabia or Russia, but what really matters in this instance is where Iran is situated on the map. Most of the world's oil passes close to Iran through strategic areas. In fact, any military action in the region is considered a risk to oil supply routes. So what we're seeing is more about fear than real supply cuts. Investors are worried that this conflict could spread, which could interrupt oil shipments and cause more price increases. So for South Africa, this isn't great news either. We import a lot of our oil, meaning higher petrol prices can push up food and transport inflation. Subsequently, this could even put more pressure on the Reserve Bank to stay cautious or even consider increasing interest rates.
So I was going to say, Mabianine, let me just interrupt you there. If you can see on the left-hand side of your screen, we've got visuals there of the Eastern Cape where President Ramaphosa is visiting. We are expecting him to give a speech anytime now. And of course, as soon as that does happen, we will take you live to that. But Mabianine, you spoke to the issue of the so what for the viewer here at home, saying, so what does this all mean for us? You've talked about the possibility of higher fuel prices, etc., etc. And we've also seen that the rand has depreciated quite substantially, which is also very inflationary. So tell us about that.
Correct. So the rand performed very well in the past few weeks, but today it's back under pressure, trading around 18.01 to the US dollar at some point. A lot of that, again, like I said, is tied to what's happening globally. You know, when the world gets nervous, especially about things like war and oil, investors pull out of risky assets, and unfortunately that includes the rand. Again, also, we saw Asian markets were down earlier today, and it seems we are following that trend on the JSE. There's great general risk-averse sentiment that is weakening emerging market currencies and equities. It doesn't mean our local economy is suddenly gone bad. It's more about how we are connected to the global mood. And right now, unfortunately, investors are very nervous.
And very quickly, with events happening in places like the Eastern Cape, year in, year out, we keep on having these climate-related incidences. No doubt this is very bad news for our local insurance companies.
That's correct. Look, again, insurance companies will always try and minimize the risk of such events like natural disasters. It does seem to interrupt, their bottom line when these occur frequently, as we've seen recently.
All right, Mabianine, thank you so much for your time and your insights there. Have a great weekend. That was Mabianine Piri. He's a market analyst at EBC Financial Group.